Imagine this. You're staring at your portfolio, heart pounding as the S&P 500 skyrockets to yet another all-time high. Billions pour in from everyday investors like you, chasing the dream. But in the shadows, the real power players, hedge funds, institutions, and even members of Congress, are dumping shares by the truckload. They're cashing out on massive names, leaving retail traders holding the bag. What do they know that you don't? Stick around, because today we rip open the veil on 4 stocks Congress is fleeing faster than a sinking ship. We'll dissect each one with brutal analysis, reveal if they're toxic traps or hidden gems, and arm you with the data to decide, buy the dip or run for the hills. This isn't just market chatter, it's a financial thriller unfolding right now, and you're about to get the insider edge that could save your wallet. Boom! That's our hook, exploding onto the scene like a market crash no one saw coming. The status quo? Shattered. Markets scream overvalued, yet the Dow joins the party with its own record highs. Everyone whispers it, but no one acts, except the elites. Institutions sell billions in July, June, and on a trailing 12-month average. Hedge funds mirror the move, unloading in the latest data. Retail? You're still buying, pouring cash in while they dump. It's not pocket change, it's billions in household names. And here's the twist. Congress members, those supposed public servants, join the exodus, selling millions in shares. Why? Because they've got an edge sharper than a Wall Street knife. But wait, what if this mass sell-off signals the bubble's about to burst? Picture Nancy Pelosi, not the top performer, but a legend in congressional trading. Over 10 years, her portfolio surges 745% against the SP's measly 242%. She crushes Warren Buffett's Berkshire Hathaway. And it's not just her. 2024 data shows David Rouser topping the charts with triple-digit gains. 2023, Brian Higgins up 239%, while the S&P limps at 25%. Year after year, they outperform massively. Search the data yourself. It's there, screaming unfair advantage. Now they're dumping 4 monster stocks. Take Novo Nordisk, stock 1 in the firing line. Congress bails as it craters 62% in the last year, 39% year to date. Over 10 years, it lags the S&P at 91% gains. From a peak of $145, it spirals to near 52-week lows. Only one buy rating from Seeking Alpha. Wall Street calls it a hold. But is it a screaming buy? We crunch the numbers. Forward PE at 13.2, way below the 5-year average of 30, undervaluation red flag. Yield hits 3.3%, towering over the 5-year 1.4%. Historically, Novo trades at premiums, but now it's dirt cheap. Growth gets a D-, but revenue jumps 21% year-on-year, projected 18% this year, beating sector mid-single digits. EPS growth, 7.5% next 3 to 5 years, below sector 11% and their own 15%, but 100% earnings beat track record. Institutions own 12%, sold $6 billion last year, but bought $7 billion, doubling buys in Q2. Our DCF intrinsic price? $53 on updated guidance, down from $82 on old numbers. At current $56, it's a 6.4% premium. Want 10% margin of safety? Buy at $47. Wall Street targets $67, 20% upside. Congress sells, institutions buy the dip. Your call, avoid or pounce. That tension builds, doesn't it? An open loop dangles. If Congress flees Novo amid promising sales and liver disease approval, up 7% post-market, what's next? We escalate the stakes, rising action intensifying like a storm-gathering force. Markets look bubbly, but Congress's sells paint a darker picture. They're not just dumping, they're signaling doom in well-known behemoths. What if American Express stock 2 is the next domino? It was up 22% last year, but only 3% year to date, underperforming the S&P, yet crushing it over 10 years at nearly 300%. Trading near 52-week highs, but Wall Street's buy rating whimpers at 3.55, barely a buy. Story 2 forward PE 19 above 5-year 18, rarely undervalued in 5 years, except during liberation periods. Growth, B grade 9% year-on-year, same projected, above sector, near 5-year 10%. EPS 14% projected, beating sector 10% but below its own 21%. 75% beat rate, forward PE under 18 next year. Institutions own 84%, sold 12 billion but bought 19 billion net buyers in Q2, twice as much. Intrinsic price $325, 6% margin of safety. Buy at $292 for 10%, $260 for 20%. Wall Street sees $332, 8% upside. Baked in growth, 2.6%, too low. Undervalued gem, Congress dumps, institutions load up. The loop tightens, overvalued trap or steady climber. We push further, complications mounting. Hedge funds sell as retail buys blindly. Congress's edge, outrageous outperformance, yet Trump eyes banning their trades. Good news for fairness, bad for their golden goose. Enter Microsoft, stock 3, blasting into the $3 trillion club behind Nvidia. AI fuels it, but other streams grow too. Up 24% last year and year to date, over 1,100% in 10 years, demolishing the S&P near all-time high of $555. Strong buys from Wall Street and seeking alpha. Story 3, yet double overvaluation signals. Forward, PE 34 versus 32, yield 0.6% versus 0.8. Growth D plus 15% revenue year-on-year and projected above sector near 5-year. EPS 11 to 12% projected, below sector 15% and own 13.5%. 100% beat streak, double-digit growth next quarters, forward PE 29. Institutions own 71%, sold 111 billion but bought 352 billion, triple. Massive Q2 buys, intrinsic at $436, 14% growth, 20% premium, $501 at 16%. Buy at $392 for 10%. Wall Street targets $524, 20% upside. Congress trims. Are you? The midpoint revelation hits like a thunderclap. This isn't random. It's a pattern. Congress sells as institutions pivot. Retail chases. Vici Properties, stock 4, ties to slumping Vegas tourism. Up 2% last year, 11% year to date, 40% in 5 years, near 52-week high. Strong buys from Quant, seeking alpha, Wall Street at 4.47, slight undervaluation, forward PFFO 14.4 below historical, yield 5.32% above 5.12, A-grade growth 8 to 9% historical above sector, 4% projected above 2.5%, strong factors 50% beat rate. Institutions own 98%, sold 2.3 billion but bought double, net buyers since Q2 2022. Intrinsic $38, 15% margin, buy at $31 for 20%, Wall Street $34, 12%, upside plus 5% yield. Congress sells, institutions buy, climactic build-up accelerates. We've covered 4 more coming in the next video. The payoff, knowledge as power. Enjoy the road to being rich.